All right, let's talk about Ethereum because something really weird is going on. You've got this price action that's just, well, frozen. But then you look under the hood, and the network itself is absolutely on fire with activity. So what's the deal? Is this the calm before a huge storm, or is there something else at play here? Okay, so here's the core of the mystery, right? You've got this massive disconnect. Price? Flat. But network growth? It's just soaring. I mean, it's a jaw-dropping pace. Now, whenever you see something like this, a divergence this big, it almost always means a major move is on the horizon. The million-dollar question, though, is which way? Up or down? So if you take a look at the chart here, you can see exactly what I'm talking about. Ever since, early February, Ethereum's been stuck in this really tight range. Yeah, it looks kind of sleepy, but in the world of trading, this kind of quiet, it's often the market just gathering its energy, taking a deep breath before making a huge impulsive move. And honestly, this next move could set the tone for the rest of the year. So, to really figure this out, we've got to play detective and follow the clues. And clue number one, well, it's all about a single number. A number that has turned into the most critical battleground on the entire ETH chart. And that number is 2150. Now, this isn't just some random price point. Think of it as a historical line in the sand. For ages, it's been a total brick wall, just stopping any rally dead in its tracks. The big test right now is whether the market can finally break through that wall and turn it from a ceiling into a brand new floor. I mean, this is that classic tug of war you see in every market, right? If the bulls manage to flip this level, turn that old resistance into new support, it's a massive psychological win. It's basically a green light for more growth. But if the bears hold that line, if it stays a wall of resistance, well, that tells us the market just isn't ready to move up yet, and we could be in for more of this, well, frustrating sideways grind. All right, let's move on to clue number two. And this is where things get really interesting. It's all about the crazy contrast between what the price is doing, which is, basically nothing, and what the actual people using the Ethereum network are doing. Okay, check this out. We're talking about almost 788,000 active addresses on the Ethereum network every single day. Just to put that into perspective for you, that's like the entire city of San Francisco hopping on the network daily. And these aren't just people sitting on their coins, no way. They're actively using DeFi, they're trading NFTs, they're jumping into Web3 apps. The network is absolutely buzzing with life. And get this, it's not just the old guard. The network is adding around 250,000 new addresses every single day. I mean, people are just flocking to Ethereum. So it begs the question, right? If the user base is exploding like this, why on earth isn't the price doing the same? What's the holdup? Well, this leads us to a classic idea in finance, the accumulation phase. The best way to think about it is like a coiled spring. You've got these big, savvy investors, the smart money, and they're quietly buying up ETH. They're doing it carefully, without making big waves in the price. They're basically compressing that spring, building up all this potential energy. And when they finally decide to let it go, the price could just explode. Okay, so for our third and final clue, let's pull back for a second. Let's zoom out from the nitty-gritty of charts and on-chain data and look at the bigger picture. What's going on in the wider world, economically and politically, that could be pushing things around? And what you find is that there are actually some pretty powerful forces or tailwinds quietly propping up Ethereum from behind the scenes. For one, global tensions seem to be easing a bit, which makes investors way more comfortable taking on riskier assets, like ETH. At the same time, oil prices have been stable, and that's helping to calm down fears about inflation. And of course, you've got that incredible network growth we just talked about. All of these things are like these strong, silent currents pushing in the right direction. So let's recap. We've looked at the technical battleground, we've looked at that weird on-chain paradox, and we've checked out the bigger macro picture. Now, putting all those clues together, the analysis points to one most likely scenario for what's coming next. And here's how it breaks down in 3 simple steps. Step 1, we see a little short-term pump, probably up towards that next big psychological number around $2,200. Step 2, that rally kind of fizzles out. It hits a wall of sellers and just can't push through. And step 3, now this is the really important part. We get one final dip, a correction downwards that's designed to shake out all the nervous investors. And if you look back at the chart, you can see exactly what that's projected to look like. You see that initial pop upwards, then the rejection, and then that decisive drop right into that key support zone, somewhere between 1450 and 1550. The thinking here is that this is the zone where the big money steps back in. They start buying again, and that's what builds the foundation for the real rally to begin. Now, I know what you're thinking. A final dip sounds kind of bearish, right? But the analysis here suggests it's actually the complete opposite. It's seen as a necessary reset. It's that final shakeout you need to build a really solid launch pad for a healthy, long-term climb. It just kind of cleans the slate, you know? And all of this leaves us with the million-dollar question, doesn't it? If this whole scenario actually plays out, could this be the last great buying opportunity before the next major bull run really kicks off? Well, according to this analysis, the answer could very well be yes.